Good evening, Garage Gang. You know what time it is? Thursday, January 8th, the nightly recap. And tonight feels like the market just got a fresh paint job. Shiny, polished, looks flawless under the lights. But when you open the hood, you realize half the bolts are finger tight because this tape looks calm. It feels orderly. And that's exactly when people get hurt. The headlines tonight sound like satire, but unfortunately, they're real. The U.S. government ordering $200 billion in mortgage bond buys to force rates lower. The House quietly renewing Obamacare healthcare subsidies for 3 more years. The Treasury pulling the U.S. out of the Green Climate Fund overnight, Washington arguing over Venezuela while oil and geopolitics simmer, banks circling crypto wallets, stable coins processing $33 trillion in transactions last year, AI approving prescriptions, and tech stocks getting sold while the Dow pops champagne. That's not a rally. That's a rebalancing event disguised as confidence. And underneath the hood, liquidity is uneven, volatility is mispriced, and positioning is quietly setting traps for anyone driving with cruise control on. So if you're here for the bedtime version, wrong channel. If you want to know what's actually happening under the hood, tonight's your night. And if this already makes sense, hit the like, tap subscribe, and send this to the friend who keeps saying, I just want to see how it plays out. While it's already playing out. All right, let's get into it. Let's start where the pressure is really coming from. Policy. Because today wasn't a normal market day. It was a government footprint day. First, the House passed a bill renewing Obamacare healthcare subsidies for 3 more years. And some people laughed and said, free money? That's not what this is. This is cost suppression. This is Washington looking straight at healthcare inflation and saying, we're not ready to let the public feel this yet. You don't extend subsidies in a booming system. You extend them when removing support would expose stress. Now pair that with housing. The president openly instructing representatives to buy $200 billion in mortgage bonds. Let's be crystal clear. That's not guidance. That's not signaling. That's direct market intervention. That's the government stepping onto the track, grabbing the wheel and saying mortgage rates are too high for political comfort. When housing needs help and healthcare needs padding at the same time, you're not watching growth, you're watching containment. And then came the tax comment. The Treasury Secretary saying millions of Americans could see the largest tax refunds of their lives. Again, not celebration. That's liquidity being handed back to consumers quietly to keep spending alive. This is how governments manage slowdowns before they admit them. Now zoom out. The Treasury also announced the United States is immediately withdrawing from the Green Climate Fund. That's not just environmental policy. That's capital redirection. That's energy realism overtaking idealism. That's a signal that economic security is being prioritized over global commitments, and that shift matters for commodities, energy, geopolitics, and inflation paths. Now layer in Venezuela. The Senate votes to advance a resolution blocking further military action without congressional approval. At the same time, the White House signals it would veto restrictions. That's not noise. That's geopolitical tension without resolution. And unresolved geopolitics always leaks into oil, currencies, and risk premiums. And while Washington debates authority, markets quietly price uncertainty. Now let's talk about how the market reacted. The Dow finished up 270 points. Sounds great, but the S&P and NASDAQ slipped. That's not strength, that's rotation. Money didn't leave the market, it left tech. Investors rotated away from high multiple, long duration names and into areas that survive slowdowns better. Utilities caught bids, gold refused to roll over, defensive posture quietly increased. That's not bullish enthusiasm. That's capital putting its seatbelt on without telling anyone, and that's where markets get dangerous, because panic is obvious, complacency is loud, but disagreement is silent. Now let's talk about Bitcoin, because Bitcoin didn't do what fear wanted it to do. It dipped, leverage got flushed, 90,000 got tested, and it held, not with fireworks, not with hype, just stubbornly. That matters because Bitcoin right now is caught between 2 opposing forces. Supply continues tightening quietly. Coins keep leaving exchanges. Long-term holders aren't panicking, but price refuses to break out. That creates compression. And compression doesn't mean boredom, it means stored energy. Above here, there's open road, liquidity waiting to be hunted. Below here, there's a trapdoor if confidence slips. No predictions tonight, just conditions. If flows expand, price stretches. If flows stall, leverage learns tuition is expensive. Ethereum woke up, but it woke up leaning on leverage, which means it can sprint or it can skid. XRP is back in conversation, but remember, like that's a trade, not a marriage. Solana stays relevant, not euphoric, not broken, still conditional. No long lists tonight, only setups. Now let's talk about the shift most people are missing. AI didn't just evolve this week, it gained authority. OpenAI rolled out health-focused AI that can pull fitness data and medical records to deliver personalized health guidance, not generic answers, context, your workouts, your sleep, your diet, your medical history. They're emphasizing privacy, isolated memory, encrypted chats, all reassuring until you realize what it really means. Your AI doesn't just know what you asked, it knows what you did, what you ate, how you slept. When you skipped leg day, your assistant isn't just smart anymore, it's aware. Then, Utah became the first state to let AI approve prescription refills, not recommend, approve. That's not replacing doctors, that's replacing the slow, bureaucratic middle layer of healthcare, the paperwork, the waiting, the friction. And once one state does it, the others follow. That's how policy spreads. At the same time, AI shopping agents are scraping the internet, listing products without permission, turning independent brands into accidental sellers. That's not innovation, that's a power shift. And on the darker side, AI-generated content is running ahead of moderation, showing exactly what happens when capability outruns responsibility. So connect the dots. AI is touching healthcare, payments, commerce, governance. This isn't cool tech anymore. This is infrastructure, and infrastructure doesn't ask permission. It forces adaptation. Quick garage note before we wrap. Triple X is under the weather tonight, so no trench picks today. We'll have him back in the driver's seat as soon as he's good to go. So here's where we are as we close. The road looks smooth, the speed feels comfortable, the cabin is quiet, but the car is heavier than most people realize, and the brakes haven't been tested yet. Opportunity is real, risk is hiding, and the next sharp move won't come with a warning light. Stay sharp, stay patient, engine's hot, safety off, let it rip.